All right. Good afternoon, Simpler family, Trendy family. I am actually triple broadcasting today live to YouTube here at Simpler Trading, as well as in our essential room, and of course in the Trendy Trading Room. On Tuesdays, we do a supply and demand Q&A session for an hour. This is your opportunity to ask any questions you might have regarding supply and demand or the trendy strategies that we use to trade supply and demand, as well as any questions you have regarding the trendy indicators and how we use those, or of course, to request charts. If you're requesting a chart and you want to know where the supply and demand levels are on a particular name, please let me know either the amount of time that you intend to be in the trade or the time frame chart that you would like to find out where supply and demand are at. Just real quick, supply and demand is a awesome strategy to use to trade this market, and it's really very, very simple. A demand zone is where we are expecting buyers to show up, and therefore, as buyers show up, the price of the stock goes up with it. And a supply zone is where we are expecting sellers to be waiting, and as a result, the price of the stock goes down. For me, I trade single leg strategies. So in a demand zone, I am looking to buy calls, or in a supply zone, I am looking to buy puts. You can use multi leg strategies to trade supply and demand. Obviously, in a demand zone, you're looking for those strategies that lean bullish, and in a supply zone, the strategies that lean bearish. And if we are in the middle, you can use the supply and the demand zone to set up those neutral type strategies. All right, so in the trendy room, we have some questions already queued up because we get those questions ready about 30 minutes before. So I'm going to start in there with the questions, but I will not leave you out. If you are only in the essentials room and not part of the trendy family, you can put your questions in the chat and I will cycle between both rooms to answer these questions. I'm going to start with Emil's question. Emil says, I am in FNGA and MSTR 1 week time frame. So, Emil, the first thing I'm going to talk about is the fact that FNGA is right up here at the upper weekly edge. So if you were able to catch this from the demand zone that was created down here, then price is at an area that I would trim. I put the top wick that was created back here on the 9th of April as a potential target anywhere from 347 to 365. So that is a trim area or a take your profit area. Above here, where we created this inside and down, then we need to look up and to the left for the next inside and down candle formation, and that is up here around 412. You also have candle formation up here. If I combined those two zones, the next target to the upside would be 412 to 463. those would be the targets. If you're not, I know that you're already in this trade, but if someone was looking for a potential entry, then I would say that anywhere between 274.32 and 203 would be the area that I would be looking to get long FNGA if there were a pullback, and especially this lower weekly edge here at about 235. All right, so let's take a look at master as well, or micro strategies, I should say, MSTR. And I'm going to use a 4-hour chart. That is typically the zones that I use to trade if I'm only planning on being in the trade for 1 week. MSTR also had a beautiful pullback to this demand zone here and created a little higher demand at about 244 there. This is an AC/DC bull setup as price crossed above this 276 level. It would have triggered an AC/DC bull play. And for an AC/DC bull play, Emil, your target is the upper monthly edge, which is up with a supply zone here at 327.93 by 356.11. So this would be the target area above where price is right. All right. All right, moving on to the next question. Stephen asked, Melissa, you mentioned you like to pick outperforming stocks from your watch list to day trade from the PMZ. How do you define outperforming stocks? What metric do you use? Thanks. All right, Stephen. So, for those of you who don't know, we use an indicator. It is a trendy indicator, and by far my favorite indicator to use for day trading. And I'm just, since I have MSTR up here, no, let's do SPY because that's a pretty popular one to day trade. I'm going to pull up SPY and explain what the PMZ is, since we have those that may not know here listening to this broadcast right now. The PMZ stands for pre-market. It is an indicator that is looking at price action during the after hour of the market. It uses price action to create a zone on our chart as this cyan rectangle here is the PMZ. The PMZ is very simple. Price moves above the PMZ, you're looking to go long and you're taking profits at a supply zone. Price moves below the PMZ, you're looking to go short and you're trimming at the levels that you see, ultimately targeting a demand zone. So that is what the PMZ is. Now, to answer your question, Stephen, whenever I wake up in the morning and I'm looking at narrowing my focus for day trades down to 3 symbols, I have everything from Apple, Amazon, Broadcom, all the way down to ExxonMobil or Tesla on my PMZ watch list every single day. And what I am looking at is whenever I wake up, I want to know where the S&P 500 is at. Is it green or is it red? And at what percentage, mark percentage, is it up or down? So let's pretend that the market hasn't opened yet and I'm just waking up and getting in front of the chart. The ES is up 20.26%. NU is up 0.55 and YM is up 0.12. So the first thing I notice here is that tech, the NASDAQ, tech heavy NASDAQ, is leading the way. It is the most bullish of the 3 major indexes. So I scan my watch list for things that are trading in or trade inside of the NASDAQ since all indexes are green. NASDAQ is the outperformer. Then I'm looking at names that trade within the NASDAQ and what is up more, right? Outperforming the NASDAQ. So if the NASDAQ is up 0.5% and NVIDIA is up 2%, that to me means that NVIDIA is an outperformer. I then go to my NVIDIA day trading chart, which I set these charts up every single evening and then adjust them as needed as whenever I wake up. So I can see where the PMZ is at on NVIDIA. I can see where my target is at on NVIDIA. And I ask myself, do I have a good risk to reward here on NVIDIA? The risk is the width of the PMZ, which is 25 cents. The reward would be my red zone, my supply zone up here, which is about 2.5 to $3. And so it does have a good risk to reward. That we are pretending the market has not already opened. That would be an outperformer. And I just go through the list. Palantir's up 5%. So, but if Palantir's up 5%, that's great. It's way outperforming the market. Palantir is already at a supply zone, then it's not probably going to make my list because this is where I expect resistance or sellers to be, and it would not give me the risk to reward that I would be looking for. So I just go through all these names and look at that. If the market is pretty flat, more neutral, then I like to have at least something on the list that is underperforming. And so one of my three names would include an underperformer because if the market goes bearish, I need a name on here that is underperforming so that I can look to trade it below the PMZ. Amazon would not be a good example because it's in a green zone, not where I like to short something, but just so I make that perfectly clear, I will also look for underperformers, especially if the market is bearish whenever I wake up and it's pre-market, or if it's kind of neutral, more flat. I like to have at least one bearish type name on my watch list. All right. All right, moving on. Donald said, you mentioned when using the PMZ, you wait for a candle close. Yet, I think you mentioned you do not wait for a close on SPX, but you do wait for a close on SPY. Maybe I misunderstood. Donald, you did not misunderstand. I trade SPX a little different than everything else that I trade out of the PMZ. And the reason for that is that SPX is very volatile. You can make a lot of money, as evidenced this morning with the SPX trades making, $1,000 to $1,100 a contract in 2 minutes. But you can also lose a lot of money very quickly. So with SPX, I pick a hard stop of an amount that I am comfortable with losing, right? And I set my hard stop based on that. SPY is different. I Although you can get a candle that closes way below your stop, it is not violent and your losses are not as dramatic. So on SPY, on this wick below the PMZ, if I were long, when price came back to the PMZ here, I would not be stopped out on this trade. All right. Also, The cost to trade SPX tends to be way higher per contract because I'm typically choosing at the money or slightly out of the money options. And sometimes I'm paying $2,000 per contract for SPX or even 3,000 a contract. Whereas with SPY, my total allotment or the amount that I allocate per trade is only $1,000. So even if this thing, and I've never had it happen, but even if it went all the way to zero on one candle waiting for a close, I'm not going to lose two or $3,000 because my allocation is a maximum of $1,000. All right, I hope that makes sense. David W. in North Carolina asks, if you have time, please give us an update on your outlook for gold, any time frame you'd like. Yeah, I absolutely love trading GLD. I've traded it. It's been by far my most popular trade if you're looking at just one symbol for 2025, and it actually was my most profitable in 2024 as well. So I'm always looking at gold, whether that be the gold futures or GLD. Doesn't really matter as GLD moves step in step with the gold futures. So I'm just going to show you walking down from a weekly chart all the way down to a 4-hour chart, which is the smallest time frame chart that I use for swing trades. And I'm going to talk about each time frame. So what I notice on this weekly chart is that we have weekly demand at 278.86 by 272.58. If I were looking for a swing trade that I planned to be in for 2 to 6 months, right? I would be interested in trading this demand zone, so going long. But what I noticed right away is that we are extended from this EMA cloud. That does not mean that price is just going to flush, although it could, all the way back to this EMA. What can happen and often happens when a name is extremely bullish is that price will just kind of dance within the body of this candle right here. Price will go up and down for a few weeks, and this EMA cloud will continue coming up. And then eventually you get a pullback to the EMA cloud, and it might be all the way up in here by the time that happens. And then you get that touch of the 9 EMA on the weekly chart, and price then will continue to the upside. So it is from the weekly 9 EMA, but that doesn't mean that there's just going to be a huge sell off in gold. I am still very bullish gold. All right. Now let's look at the daily chart. Same idea. This is a trade we've already capitalized on, and I'm now out of the gold swing position. But let's take a look at where we have daily time frame demand on gold. That is down here at 282.22 by 272.58. This is a demand zone and an area you can see I have an alert set here just above this demand. In the event we get a pullback, I would know to go and look at my daily chart and start a new swing trade in gold. Again, targeting this area between where price is at and the all-time high 299.38. Now looking at a 4-hour chart, and you can see our demand zone on the 4-hour chart is 288.05 to 281. 1. I also have an alert set here that if gold gets there, I would be alerted. It will say 4-hour demand, and I would go to a 4-hour chart, and I would look to take this trade out for a week to 2 weeks. So on a 4-hour demand zone, I'm looking at a week or 2 weeks. On a daily demand zone, I'm looking for 2 weeks to 6 weeks. And then that weekly, I've already told you, anywhere from 2 to 6 months. So that is what I am waiting for. In the meantime, we can always trade a GLD from the PMZ. Today, price is really just consolidating here. Right at the PMZ has not presented an opportunity to go long really for me. And so in this case, I have not day traded gold, but until I get a deeper pullback to a 4-hour or daily demand zone, I will focus on just day trading gold. Yeah, so that's my analysis on gold. I'm going to flip over to the essentials room real quick and just see. All right, no questions yet. Essentials fam, if you have a question, don't be scared to put it in the chat. I would be happy to answer it. I'll go back to the trendy room and continue on answering the questions here. Deepak asks, as usual, can you show us the zoomed in view with supply and demand candles on SPX 0 DTE? I didn't share my SPX 0 DTE chart with the room, but Deepak, here are my zones for SPX for a day trade. 54, 39, 17. This is the inside and down right here. And I went ahead and combined it with this inside and down as well. So this is the 2-hour inside and down, the red zone for a day trade that SPX definitely has hit. And so far, it is not able to really make any progress into that zone in the upside. As far as the demand that is down here at 52.50, where we created this double inside and up. And then on down here, we have a double inside and up there. And so those are the two zones that I had for SPX 0 DTE. McV asks, what is ACDC bull? What is an ACDC bull? Yeah, so we use that strategy to trade. We have a scanner that scans for ACDC bull or bear trades. So let's look at the ACDC bull list. And I believe, yeah, I took a trade on Okta. That's an ACDC bull trade today. As a matter of fact, here is the Okta, OKTA. So with an ACDC trade, in this case, I'll be talking about the ACDC bull trade. The trade is this. You have your decelerator arrows and your accelerator arrows, ACDC, also a cool band. The concept is real simple. If price is coming from the bottom and pushing up through these decel arrow level here at about 99-ish, okay? As price moves up above that 99, you're looking to go long. You want to trim at the accelerator arrows, and I have a supply zone up here, so I would be trimming here again at 109. 77, your target is the upper monthly edge. Then for an ACDC bear trade, it is wow, not much ACDC bear action going on at all. So I will click on DVA and show you ACDC bear. All right. So the ACDC bear trade is just the opposite. Price is coming from above as it pushes through the accelerator arrows. You're looking to go short, trimming at the accelerator arrows and targeting the lower monthly edge. That is an ACDC bear trade. All right. FJ says, can we please look at ZB Treasury bonds 15 and 30-minute charts? You bet. Let me get back to my PMZ watch list and ZB. So the way that I set up my targets for my day trades is I like to use 2 hour inside up and inside and down candle formations. I use that as the inside and down candle formation equals the red zone or the target to the upside above the PMZ. And then inside and up candle formations equal the green zone or the target to the downside for PMZ or day trades. All right, these levels in the either based on trendy edges or Fibonacci levels. So a 15, let's see, what did you 15 and 30-minute charts. So let me start with the higher time frame first. All right. Let me get my targets there. And I'm going to remove these two levels. And we're going to go to that 30-minute chart first. Okay, so if you want to trade off of a 30-minute or a 15-minute chart, you can use Fibonacci and inside and up, inside and down candle formations for your trims. All right, right away on that chart, I see a beautiful inside and down candle formation that was created several days ago. Looks like 3 days before today. Inside and down candle formation on the 30-minute chart. That is a target to the upside. As far as 30-minute inside and up candle formations, you can see it right here, this being the inside candle and that being the up candle. That creates a little zone there. That's your PMZ. Now, another way to trade, whether it is a 30-minute chart or a 15-minute chart, is to use Fibonacci's. So right now, price is above the PMZ, right? So my bias is to the upside. I see a double inside and then up here on the 15-minute, followed by 3 inside candles and an up, and then another up. All right, so those are some targets that I would expect to act as support if ZB were to pull back on this 15-minute chart. You can also use Fibonacci as this is in a bullish trend here on the small time frames. If you use Fibonacci, then I am expecting the 236 to the 382 to hold as support here. And I would be a buyer on a dip there. I also like that that lines up with this formation here. All right. So a dip back into the bull channel here with the 15-minute inside and up would be a buy the dip opportunity. Or if you would rather trade the golden pocket between the 50 and the 618, you have a trendy edge inside of there as well, or wait for a pullback to the PMZ before going long. Again, 115, that is a trim for sure, and then a target to the upside side would be 115.16 by 116.11. All right? All right. Let me see here real quick. Um, Northport Trader asks how you get the right and left arrows next to where you have the multi time frames in your toss. It's because I have these. I have this is a let's see, restore cells. It gives me the arrows because I have my favorite time frames put into 1, 2, 3, 4, and 5 charts. So a weekly, a daily, a 4 hour, a 2 hour, and a 5 minute. And then when you maximize one of these cells, it's going to allow you to scroll quickly between your different time frames. And Northport, there is a video because I know you're in the trendy room. There's a video in the notes section under educational videos towards the bottom that will give you step-by-step details on how to create that multi-time frame charts. Right? Guitar for Dog says, any ideas on Baidu? Well, let's take a look at Baidu. Since you didn't specify a time frame for Baidu, my go-to is the daily chart. So I'm going to give you where supply and demand are at on Baidu on the daily chart in comparison to where price is currently at. So here is price now. Right now, price is here. If I look up and left, I can see that I have inside candles followed by a candle that closed below the body of that initial candle. So this has created supply here. Now, because this name on a yearly, monthly look back is in a bearish trend, I went ahead and put the bottom of the supply zone to be conservative at this down candle right here. If this was in a bullish trend, I would be less conservative in that I would use just the inside candles as a supply zone. So my supply zone wouldn't start until $90.75. Now, why? Because if this was in a bullish trend, I would be looking for better price action to the upside. But because it's in a bearish trend, and if I were to get long from this demand zone right here, I want to be conservative and take some profits at that supply, and I want it to be wider because it is in a bearish trend. All right. So supply 89.80 by 92.71, demand 79.28 by 74.71. You have a double stack of edges right here or around 86.27. I would use that as an area to trim. All right, so going long from demand, trimming here and targeting supply, or going short from supply, still trimming at that edge and this edge, and then targeting this demand zone. All right, that is Baidu. And then the next name you asked about was CENX. CENX. We'll do that one, Century Aluminum. And we'll do that on a daily time frame as well. So same concept every time. I'm looking for inside and up. Now I have a initial candle here. Then I have a 1, 2, and this barely closed above this candle. But this is a demand, an area, right, where I would look for buyers to show up here, $16 by $13 basically. So price has pulled back into this demand zone, but keep in mind the move out of this demand zone was very muted. Why? Because it is in a bearish trend. The weekly is bullish, but all other time frames are bearish, so I'm leaning more bearish. For that reason, I would scale into a trade inside of this demand zone here. You can use these trendy edges as some potential areas to enter or to buy contracts at. Then we need to look up and to the left, and you can see that you have this was an inside candle. This candle closed inside the body of this one. This was a down candle here. Again, not an impressive move down at first. But once it came back up and tested this supply, then you gap down, and now we're consolidating in here. But these are your two opposing zones. And as a supply and demand trader, I'm looking to go long in demand, covering in supply, or going short in supply and covering in demand. All right. So that is for CE in X. A Northport trader would like to look at Wells Fargo for a put for the end of week. You bet. Let's look at Wells Fargo. That is WFC for a put. So that means we're going to find where we have supply on a 4-hour chart since you mentioned for a week. Wow. All right, here's your upper weekly edge, Northport, right? Here is not an inside and down, but there is an upper weekly edge here. So let me go ahead and put a line on that upper weekly edge. Our trendy edges, the upper edges equal playing field of supply, lower edges playing field of demand. All right. You also have this high that was created on that crazy bullish market was up 500 points swing there on the S&P from the low to the high on this day. We created a huge candle to the upside, but you can see each time, and that lines up with a monthly edge, each time that it came up and tested that, we have pulled back from it. So this area I would treat as supply, right? Your actual inside and down here on the 4-hour is right up here at 68.80 by 70.30. So the way that I like to trade this is to do a starter position, so half of my allocation at that 66.21 to 67.19 area, and then add to it in this supply zone if price continues to the upside and we break out of this high here on last Wednesday, this is where I would add to full allocation. Then I need to find where we have demand at. This is not, I can tell that this candle closed slightly, right? Slightly under that candle, but this is a very large imbalance candle. You also have a weekly edge here. I would be trimming here. Your actual demand on Wells Fargo is right here. All right, so this would be the target to the downside, but I would trim at that big imbalance candle. And then you also have a very important trendy edge in the middle there that I would trim or at the very least move my stops to break even. And it's actually a double stack here with the weekly and yearly edge. So if you were to go short from these levels, then I would be trimming 62.79, 60.13 by 59.60, and then target 58.02 by $56. All right, very good. Let me check real quick in the essentials room. And Scott Terry has asked for XLU for swing trade. You got it. We actually were in XLU for a while, and that was a nice, profitable trade for us. I do like to trade XLU and XLP when I believe the market is risk off. And so let's look on the daily chart here on XLU. You have a inside and up or a demand zone right here at 75.36 all the way to 71. This is a buy the dip area on XLU. That zone is wide, right, Scott? So two things I will say about that. The first is if I have a very wide zone that I am trading from, I like to give myself a little extra time to expiration. And also, I want to scale in to the trade. So, starting the trade here towards the top, adding here at or near $72. And then my stop would be down here, a candle close below 69.42. I have supply right up here at 79.29 by $80.70. So this would be my target to the upside. So where price is at right now, it is also setting up to be an ACDC bull trade, but price has already been up here at the upper monthly edge. And so technically, the ACDC trade has played out, and we created supply there. But this supply zone has been tested multiple times. And so in the event that we break out of here and get over $80.70 on XLU, then I would look at where is that next area of supply, and that's going to be at or around 82.92 by 83.41. All right. And I'm telling you that because this supply zone has tested multiple times. And like any level, whether you trade supply and demand, or maybe you trade David's voodoo lines or John's quick hit lines, etc., whatever levels you trade, the more times they're tested, the higher the probability is that they will break, right? So this supply zone is no different, just like this demand has been tested many times as well. All right, but those are your two zones for XLU. All right, I'm going to get back here and answer some more questions for my trendy family. You're welcome, guys. All of you, you're welcome. Just Right Light would like to look at Palantir for 3 months to expiration. Palantir's nice and green today. Palantir was ACDC setup. It, I am sure, has accomplished its goal to the upper monthly. But let's look at it. You said 3 months, so I'm going to talk about this weekly chart. All right. Palantir created supply, and the top of that supply just right light is 99.01. I would not, this is me, I would not go long from here. On the other hand, if we can break above 99.01 and you're okay with your initial target being the 618 from this pullback, and that level is 102.76, that would be your immediate reward there. Then your next target is 111. Finally, 118.71 by the all-time high of 125.41. Now, I'm not a breakout trader, so I would be waiting for a pullback. But if you like to trade breakouts, then above 99.0, that breakout trade, and there are your levels for upside targets. And I would target up here at the 887 to the all-time high. All right. And I would be looking for this proximal line of this supply zone to act as support now. Once we get above this 618 at 102.76, I would flip my fibs, right? And then I would want to stay in the trade as long as a bull channel continued to hold as support. Making profits on the way up at these fib levels and then the all-time high. Okay. Kevin asks, I'm having some trouble trying to figure out how to set up the scan for the different time frame edges. I do own the Trendy bundle. Any suggestions? Yeah, Kevin, give me 1 second and I'm going to show you um, in the notes section, Kevin, of the in the room here in the Trendy room in the notes section. There is a note titled Trendy Indicators Explained. If you go down, whoops, move that. If you go down here and look at the bottom, the Trendy Edge scanner, I go step by step showing how to set up the Trendy Edge scanner to include and scan for daily edges, weekly edges, yearly edges, monthly edges. I can't show you live because it does expose the code for the indicator, but I have it on that screenshot there in the notes sections under Trendy Indicators Explained, but it does give you step-by-step directions on how to get that set up. All right? All right. Let me go back over to the essentials room. You're welcome, Scott. My pleasure. All right. So let's talk about some other names that I have watches out for to potentially trade. First, I'll look at my setups for trades to the upside. And then we will look at some potential trades to the downside. I just started a CALM, a Calmain Foods trade here. It is very bullish. Okay. That's why it's on my bullish watch list. The trade that I just started today was taken off of the 9 EMA on this daily cloud. A pullback to there. We started the position to the upside. I bought the $95 calls expiring on May 16th. I would like, honestly, and I know this sounds crazy, but I would rather see price continue down for the next couple of days that I can get fully allocated in this position. My first ad is here at 92.50, and then if price were to drop all the way back to the daily 200 SMA, which I'm not expecting it to, but if it were to drop all the way back in here, then I would be buying the $85 calls or the $90 calls, adding and be fully allocated, for which me that's $1,000 on this trade. As far as trims go, 98.05, 101.99, and targeting 107 by 116. So that's a trade that I just started. AEM, I can see that it's green, so it's nowhere near my trigger to enter. Celsius, though, is red today, so possibly close to a place that I would look to go long on. Celsius. Not quite. Not quite. I need a deeper pullback than that. Celsius came up back up to supply yesterday, and it looks like today as well, and it's just pulling back to the 9 EMA here. But I would need a deeper pullback than that. Colgate, which is a name that trades inside of the consumer staples ETF. I'm looking for a pullback to demand. It's just not there yet. But my focus, if you notice, most of the names on here are going to be related to either gold miners, utilities, or consumer staples. And that is because when the market is risk off, they tend to be uh, a safe haven to go to. Coke is another one that I have equity in Coke, but I would be interested in a swing trade to the upside, but not here in supply. Rather, I would be looking for it at the earliest about 68.73, all the way down 68 by 65.76, buying the dip down there in Coke. KB asks, how about SPY for 538? Is it okay to buy its pullback already for a day trade? So let's look at my day trade account. I can tell you, just glancing over at another screen, price is broken below the PMZ KB, and it has should be making a new low of day. All right, so let's look at it. Let me remove these fibs. So where would if you're looking for where I would be interested in going long SPY, I would say this zone here at 537.21 by 536.25 probably be the soonest I would be looking to go long, or waiting for price to pull back to the lower daily edge by this 2 hour inside and up. If I were trading from this zone though, it would be for a swing trade out days. So for a day trade, 537.21, and then I would set my stop below 536.16. So that would be about $1.05 of risk. And then because price would is below the PMZ, just know that this is now resistance. So that is your immediate reward, which is about $1.20. So that would be about a 1-for-1 risk to reward. Then once price gets back above this PMZ, then I'm going to be trimming at about 540.64 and ultimately targeting this red zone. So, but this would be the earliest I would be looking to go long. For a day trade, as soon as price broke below the bottom of the PMZ here, which was 538.46, that was a short, and this would be your first target to the downside. All right? All right, very good. Thank you for the questions, though. Let's look at some other names that EXC is one that I really like. The problem is I need a bigger pullback on EXC, but I love this beautiful looking rounding bottom, cup and handle, whatever you might call it. What I do know is that on April 9th, price pulled back into demand. And since then, boom, up, up and away, trimming 47.68 and targeting 48.93 by 50.71. I would be interested in buying a dip on this name, but 18 cents is not a dip that is going to get my attention. Now, if today's candle closes inside of yesterday's candle, then this is potentially setting up a new area of demand. If tomorrow this thing gets above 46.86 and can hold above there and close above there, then that's a bullish sign, another bullish sign. Again, targeting 47.68 and then 48.93 by 50.71. We've already talked about gold. Gold miners needs a pullback and it's green today, so no need to look there. GameStop, this is not one that I trade a lot at all, but it caught my attention because it was on the ACDC bull setup, and we created demand right here with this inside and up candle formation. Yesterday, I thought I was going to get my entry. I had my bid here at 25.50. I just didn't get the entry. You can see it came very close, probably within 20 cents. But this is where I would start a position. You can see today it came right up to my trim level, and now we're backing off some. As far as targets go, another trim at 28.77. The supply is up here at 31.26 by 34.40. GameStop does report earnings, as most things have earnings coming up, but GameStop's is not until the first week of June. So you do have time for that trade to develop before earnings. All right. So if it gets a run into earnings and I get the opportunity to, I like this because I have a trendy edge here. I have the inside and up candle formation. I have the trendy cloud right there. And I have both the 200 and the 21 SMA sitting right here as well. All right. Let's see what else. Kroger. Kroger's getting a nice pullback today, but I think it's um pretty far from a demand, but it has that round and bottom look too, and you're getting a pullback or a cup and then potentially a handle here. As far as entries go for Kroger, I would be looking to enter at or near an aggressive entry would be at or near 67.26, but demand down here at 66.20 by 64.11. So, those are some things that are on my watch list that I am interested in trading. Yeah, thanks, guys, for all of your questions. I appreciate it. I hope you found this beneficial. If you're not a part of the Simpler family or the Trendy family, come join us in the Trendy Room here at Simpler Trading. Trinity John and I trade all day long. If the market's open, at least one of us, are in front of the screens, and our passion really truly is to educate our family members on how to trade supply and demand. And we have a great win rate as well as green accounts for 2025. And that is not been an easy task. So join us if you would like to learn more. All right. Much love, fam.